if you're a Bitcoin hodler, right, then all of this is just volatility if you have a long time horizon. But if you have a short time horizon, or you're trying to divine things week by week, day by day, then clearly a lot of anxiety in the air. And all of those things are a perfect cocktail for volatility.
Hello and welcome to Smart Tech Ideas. In today's video, MicroStrategy CEO and Bitcoin bull Michael Saylor updates about the recent volatility and crashes in Bitcoin space, why Bitcoin is going through a bear market, and the key factors behind price dip in June 2022 and how Bitcoin will get out of this. Michael Saylor also explains how Bitcoin can help us in fighting the financial crisis and recession and why bearish sentiments will end soon. Make sure to stick around till the end of this video where Saylor reveals which individuals are selling Bitcoin right now and why it is a foolish idea. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video.
I think that the crypto industry is going through growing pains, and over the long term, it'll be a good thing, but in the near term, it's a painful thing. There are 19,839 cryptos on CoinMarketCap right now. And there's one Bitcoin. And that means there's 19,838 other things that are all thrown into the same bucket. So everyone in the marketplace and everyone in the mainstream media is trying to figure out what's the difference between Bitcoin, Ethereum, and what's a currency and what's a stable coin and what will happen to these things. And so at the micro level, a lot of learning and rationalization as the industry goes across the chasm from the entrepreneurial offshore Wild West roots to the onshore institutional public image that is about to become. And it needs to evolve and change in order for the big banks and the big investors and the big institutions to become involved. I see the industry is going through a very critical transitional period. And then if we overlay on that, the macroeconomic environment, which is just brutally painful. Right. I think today the NASDAQ is down 362 basis points right now, that's a lot of stress that's being placed on the entire financial economic system. And in the midst of all that stress, a couple of breakdowns, the famous one being Terra, but the secondary one being the Celsius breakdown that took place in the last few hours.
Sunday's advance has sent Bitcoin's price back above the $20,000 mark it has held for the majority of the last month, but analysts remain skeptical about the surge's durability. Recently, Bitcoin was trading at over $20,500, an increase of nearly 8% from the previous day. The largest cryptocurrency by market capitalization fell below $17,800 at one point the day before, its lowest level since mid-December 2017, when Bitcoin was near the pinnacle of its bull run. This decline also dipped below the cycle's peak, disproving the idea that Bitcoin will not surpass a prior cycle's peak.
If I look back to the first of the year 2020, and I compare Bitcoin's performance versus everything else, I think it's 10x better than most conventional assets. So I think it's already been doing very well in the past few years. I think it'll continue to do very well. And the primary driver is going to be education. As more and more people understand what it is, as they understand a digital monetary network, and they understand its status as a non-sovereign store of value, deflationary, synthetic bearer instrument, right? As they understand that, then it's going to gain more adherence, and it's going to continue to monetize. It'll do it with fits and starts.
Ether, the second largest cryptocurrency by market capitalization, followed a similar pricing pattern, plummeting to a near 5-year low below $1,000 before recovering over the weekend. It recently traded for approximately $1,120, an increase of more than 13% from the previous day's price. LTC and XS were up more than 17% at one time, while other significant altcoins were also in the green.
I've classified all the people in the market as 5 categories. You've got the deniers, the skeptics, the traders, the technocrats, and the maximalists. The deniers and the skeptics don't put money into the market. They just hate on it. Today, if I look at Binance, the spot volume in Binance is $6 billion, which is triple, quadruple any normal day. In fact, this is probably one of the biggest days of the year, if it's not the biggest day of the year. So if you are a trader, then you want something with a lot of volatility that trades 24/7, 365, and they're going to trade the momentum of it. The traders, you know, they'll trade it with risk assets as long as it's correlated to risk. So today's a risk off day, and they'll think it's a risk off asset. And on risk on days, they'll trade it the opposite direction. If you spend 20, 30, 40 hours, maybe you can be a technocrat investor. And if you spend hundreds of hours, you'll become a maximalist investor. But if you're a trader, they're not going to spend more than a few hours. What they'll do is they'll run back-tested statistical models. And they'll say, well, we back-tested Bitcoin versus the NASDAQ index, and we determined that it trades with 3 times the volatility or 2 times, you know, the amplitude. And then they'll adjust their models accordingly, and they'll look to arbitrage that. The traders have all the money in the market right now because the maximalists are all fully invested. They're dollar cost averaging. The technocrats will become more prominent, but right now the technocrats are investors, and all the tech investors are bearish. They're all afraid.
On Friday, the tech-heavy NASDAQ completed an otherwise dismal week for stocks with a small rise of 1.4%, while the S&P 500 gained a fraction of a percentage point. The S&P, which contains a significant tech component, fell 5.8% for the week and reached bear market territory, indicating it is down at least 20% from its previous peak. The Dow Jones Industrial Average decreased little.
When you're a young investor, you hate the people that short your stock. You know, when I was an early CEO, I used to hate the short sellers. But then I began to realize that people that sell your stock short are going to buy your stock. They've just got it in reverse order. So people that short Bitcoin will eventually buy back Bitcoin to cover the short. They've got it in reverse order. The danger is not the traders. The danger is having an asset that is of no consequence to anyone. The market's being driven by the traders right now. It's the most exciting market in the world. It's the only thing you can talk about on Saturday afternoon. It's the only thing you can trade on Saturday afternoon. And in times of risk off, you know, when everybody's bearish, and everybody's kind of bearish right now because of Fed policy and inflation and fears about the future. When they're bearish, they'll act bearishly on the weekend, and they'll amplify that. But when that sentiment changes, then it'll work for us in the opposite direction.
Investors continue to fret over soaring inflation, which reached a 40-year high in May, the ongoing economic repercussions of Russia's invasion of Ukraine, and the growing likelihood of a worldwide recession. In the meantime, crypto markets have had to digest a string of catastrophes dating back to early May, when the Terra USD stablecoin failed. According to a source, cryptocurrency loan platform Celsius halted withdrawals last week in crypto hedge fund 3 Arrows Capital faces possible collapse after incurring at least $400 million in liquidations. Coinbase and a number of other large digital asset exchanges have recently announced significant staff reductions. The anxiety and greed index has been hovering in the zone of intense fear for weeks and is now near its all-time low of 6 on a scale from 0 to 100. So, do you think Bitcoin bear market will end soon? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.